Welcome to Beers with Rich. I'm Rich, Head of Investments at Under the Radar Report. We're in reporting season and it's clear it's stock picker's paradise. Why is that? Because there's loads of small caps trading on single digit PE multiples, that's why. So the definition of a single PE multiple means that a stock's basically generating a current return of more than 10%, and that's after tax. So that's based on simple maths, so that's why we're excited. So under the radar, we are literally bringing single digit PE stocks to subscribers every week. Why? Because small caps are trading at their biggest discount to their bigger brothers. How do we pick them? Well, of course, we give the financials a good going over. That goes without saying. But then we place them into categories. First category, turnarounds. It's a lot of stocks that we've picked in our 11 years under the radar have been turnarounds. So one of the standouts recently is Redbubble. It's returned 60% in like 4 months or something. You can read about the stock in this week's issue. This company suffered post-pandemic syndrome, a common affliction for technology-based companies that saw some supercharging sort of conditions in the pandemic, and now post-pandemic they're suffering higher interest rates and life is more difficult for them. But a founder came in, took charge, cut costs, and now the stock is really revving up. What these guys do, digital marketplace. So basically that's worth checking out. Second category, growth. I mean, we like to see stocks with good growth runways that aren't priced in. A classic case for this type of stock in recent times has been lithium, which we've picked, which we've been early on, and we've seen that growth pathway early. But I tell you, the growth pathway continues. Read this week's report, read about Allkem. I mean, the numbers literally have to be seen to be believed. This thing is turning into a cash flow producing machine with growth. So I urge you to check that one out. Third, value. Well, we're not value hunters for nothing. I mean, we are cheap. I mean, literally, we love cheap stocks, and that's what we're talking about. This week's report, read about Enero, the advertising group. EGG is the code. Like, these guys have suffered big share price weakness off the back of the obvious tremors in the economy, the uncertainty about economic conditions. But this stock is really worth checking out because it's a lot more resilient in our view than the market's factoring into the current share price. They've got blue chip customers who are flexing their marketing muscles as we speak. So look, the big news in the financial press isn't Redbubble, that's up 60%. It's not even Caprol, that's up 40% a year. We also cover this week. Just 2 of the 10 or so stocks we cover in depth. No, it's the BHP pronouncement that the iron ore price is not going to go below US $80 a tonne. So we like BHP. But the big takeout for us from the miners' result wasn't the iron ore pronouncement. It was that it expects copper to increase over the next few years due to a lack of supply. So BHP might be big into copper, but if you're a copper bull, as we point out in issue 562 a couple of weeks ago, or last week actually, worth reading in our copper report, the way to go is Sandfire Resources. Now this stands out because it's got that turnaround element that we talked about before. It's basically reinvented itself with a new CEO, but more importantly, one of its projects in Botswana is ramping up. Provided that ramp up goes okay, I think we're going to see that stock really catalyzed for big returns. So I think it's worth checking out, and it's worth pointing out, I think, in Sandfire's case, that there's a number of institutions on the register because you literally can't get a quality pure copper exposure anywhere else, certainly not on the ASX. So the beer, We always get to the beer. Making excuses. Well, I wish I could pretend I haven't done that in my life. By Mountain Culture. I think it's Katoomba. So a mountainous beer making excuses. Let's crack it. It's cracked. It's a oat cream IPA. That does not mean much to me, but let's taste it. It's actually pretty smoother. I must admit, over doing these beers with Rich, I have developed a bit of a taste for the old oat cream. Like the company's got to get back to it. There's loads of reports to read through, and our analyst team's working feverishly to get those reports to our subscriber. So here's to Beers with Rich. Talk to you next week. Cheers.